Why is Nike's stock price so low? Welcome back to the Dividend Compounders Show. Today, we're going to look into Nike and do a stock analysis. To be fully transparent, I'm a hater. I think this is a value trap, but let's see if I will change my mind by the end of the video. In this video, we are going to look at the intangibles, the finances, and run some valuation models to determine if it's a delicious or disgusting dividend stock. And I already watched other YouTube videos attempting to do a stock analysis on Nike, and they're too focused on the numbers. In fact, they neglect the story and the intangibles, which I would argue drive the numbers. So what's going on with Nike? I tuned into their recent annual shareholders meeting, and they're doubling down on diversity, equity, and inclusion efforts while other companies are focusing on best business practices of hiring the best and most qualified candidates. In fact, it was their first prioritized agenda item for the meeting. So Nike is taking a very politicized stance on human capital and their workforce. They can't change the world, but they can indeed make changes to their employees. Nike is taking a gamble on resonating with the people through social justice and ramping up hiring of underrepresented minorities and women. This excludes Asians. Apparently, Asians don't make the cut for what qualifies as a minority despite making up 5% of the United States population. Of course, Nike can't outright say, we're going to hire certain people and not others, because that goes against discrimination policies, but that's exactly what is going on, and I think from an HR perspective, we're all going to see if their bet pays off or not. Don't get me wrong. I think diversity in the workplace and in the classroom is crucial for success. However, it should be about equal opportunity for all, not prioritizing some groups at the expense of others, especially when it means sidelining highly qualified individuals based on race or ethnicity. Any form of discrimination undermines merit and fairness, both of which are essential for genuine progress and success. Because my whole thing is, you could be a white person from a lower socioeconomic class, raised in the woods of West Virginia, and work your butt off only to be rejected because of your skin color. It's completely nonsense. So instead of skin color and gender identity, we should prioritize the diversity of thought by embracing people with opinions ranging from the upper class and lower class. Instead of having an entire project team made up of people who were spoon-fed with a private school education, instead of that, imagine having team members from all walks of life. That would be far more productive to every conversation in the room. That way, it isn't an echo chamber as they push and publish a shoe for the masses. There will be pushback and valid callouts from all sides of the spectrum in society. You do that, and you'll naturally integrate a more diversified workplace with all ethnicities and people from all walks of life. You might be like, what the heck does any of this have to do with Nike? You sound like an idiot. And to that, I say they're a polarizing brand which will self-eliminate potential customers, and in turn will affect their revenue growth in the future. So if you ignore this stuff, you're the same type of person who thinks aliens don't exist. On a different note, I feel like a huge advantage that Nike has over other retailers is their best-in-class supply chain. They utilize factories and production in over 37 countries with 518 factories. Meaning, if there's a bottleneck or issue in one facility, they can continue their output without too much stress. The point I am trying to make is that Nike can manufacture and produce apparel like no other company in the world. And prior to researching and doing a deep dive on Nike, I thought the reliance on China would wreck them because of the upcoming Trump tariffs. But come to find out, about 22% of their stuff is made in China, and they've been transitioning from China to Vietnam for quite some time now. So that was a surprising detail that highlights Nike's ability to plan for the future. Then again, we're still talking about a fifth of their production being based in China, so the tariffs will still smack their nipples. Just not as hard as I had first anticipated. And speaking of China, Nike's biggest growth opportunity is not the US, Europe, or even Australia. Rather, it's China. In 2016, Nike generated $3.9 billion in revenue within the Chinese market, and this past year, they did $7.5 billion. The growth estimation is 11% year over year in sales for the Chinese market going forward until they make a different forecast. That's pretty good stuff between you and me. Before you think Nike is dominating across all American sports, that's simply not true. For instance, Major League Soccer is partnering with Adidas until 2030. As a matter of fact, as an amateur soccer guy, I can tell you that Nike used to be one of the best soccer brands. However, as of 2024, Nike has lost their appeal because of Mizuno, Adidas, and Puma. The competition is getting better and better at improving their gear and brand reputation. All that to say, losing the sponsorship for American soccer to Adidas is a huge loss in my opinion. And right now, Nike might be the brand we see in major sports like basketball and football, but that might not always be the case. Sponsorship is very cyclical in nature because from 2001 to 2011, Reebok used to be the official manufacturer of the National Football League jerseys. So even though Nike is the face of some sports today, that might not be the case tomorrow. And as a reminder, once we hit 5,000 subscribers, I'm going to be uploading my life and investing story video. Believe me when I say that I have lived the lives of 10 different men. And at 10,000 subscribers, I'll do weekly portfolio updates and trades. We reached 3,000 subscribers over the span of 1 year, but it seems like we have plateaued. Help me out and subscribe. And in other news, Nike has changed its CEO from John Donahoe, a consultant guy, to Elliott Hill. I creeped on his LinkedIn, and I saw that Elliott Hill was with the company since 1988 and retired in 2020 as a senior leader. But the company has been going downhill for a while now, so Nike begged him to leave retirement and come back as the CEO. His game plan is to do marketing around the athletes and make products for quote-unquote athletes. Essentially, Nike wants the story to be how wearing their stuff will make you a better athlete. I guess the vision is this: even ordinary people can feel like athletes when they put on a Nike t-shirt, despite the fact they just devoured an entire box of pizza by themselves while watching Thursday Night Football. The thing is, I truly don't care what clothes LeBron James is wearing. But hey, more power to you if you can walk around but ass naked in your tiny little condo with a Nike hat on. I find it funny because across the entire sports realm, athletes frequently partner with other brands. For example, when I think of an athlete, I think of CrossFit, whose official sponsor is a company called GoRuck. And based on my knowledge, they make a pretty durable backpack. Nike not sponsoring CrossFit is a huge missed opportunity for a bunch of gym-going people. And even casual runners will choose to wear a pair of Hoka's, Sauconys, or New Balance over a pair of Nikes. So from hardened athletes to the casual person, Nike is losing its economic moat. Come to find out, they severed their relationships with physical shoe stores because of their short-sightedness, especially with the running specialty stores. What happened is, during the pandemic, Nike used to drop limited releases of their shoes to artificially create a supply and demand issue. In turn, sneakerheads would stand in long lines to buy the exclusive Nikes, and as a result, the resale value was through the roof. This meant the sneaker shops cultivated and curated the culture for people to buy into this Nike hype trading mess thing they had going on. Then Nike decided to go direct to consumer with exclusive shoe drops and cut out the middleman. And in lieu, Nike sent shoes that the consumer didn't necessarily want to buy to the shoe stores while holding back on the exclusive shoes for their direct-to-consumer channels. What this did was devastate the bottom line for shoe stores, and to stay afloat, they had to start pushing hard on Hoka's, New Balance, Brooks, and other shoe companies to make up for Nike abandoning them. At first, Nike's strategy worked really well, but then the people decided that Nike was no longer cool. What we are seeing now are consequences of Nike's greed biting them right on the left ballsack. Most running shoe stores don't even carry Nikes anymore because of the betrayal, and that has led to runners trying different brands. All I'm saying is, once a runner tries a pair of Brooks, it's game over. They won't be going back to a pair of Nikes. Case in point, go to any serious marathon event and look at the runner's shoes. That does not mean Nike is obsolete and out of favor. It just means their slow decline is in full force. They're still the market leader by a long shot when it comes to running shoe brands and sportswear companies. However, they stopped prioritizing performance innovation and pivoted that cash into digital marketing instead. And now we all know how well that went. The direct-to-consumer business model worked during the pandemic, but to sacrifice your retail channels to do so was a terrible call in hindsight. You can see why Nike decided to part ways with their previous CEO, John Donahoe. Under the previous CEO from 2020 to 2024, look at Nike's stock performance. It's a mess. Your money would have decreased by 16% over the span of 5 years. What's hilarious but got to be a hit on the ego is when Elliott Hill was announced as the next CEO, Nike's stock price jumped up by 10%. To know you were so disappointing as a CEO that the market is excited at you leaving is probably the sign you needed to just retire from business. And it's not like John Donahoe is walking away empty-handed. He was compensated with millions of dollars over his tenure as the CEO. He'll be fine. And that's the part of being in a leadership role, because I highly doubt the business decisions and moves that happened recently were John's original ideas. But he gave the green light for those things to happen, so as a leader, if your business does poorly, you take the blame. On the other side, if things go well, you also get the credit. My entire working life, I've always been in a position of authority or management. I love being able to lead my people and take care of them. And for the first time ever, I'm at the bottom of the ladder at my part-time minimum wage job, and I get treated like dirt. Having experienced both sides, I'd argue it's better to be a leader burdened with stress than it is to have no voice in the room or lack the ability to make change. If my YouTube channel starts doing well, I'm quitting that job as soon as I can. Now let's go ahead and take a look at some numbers. This is a YouTube channel that fancies dividend compounders, so first up will be their dividend profile. Nike currently has a 2% dividend yield, which is average. Not good nor bad. The payout ratio is quite healthy at 40%, and they grow the dividend payout on average 10% year over year. All in all, I'd say their dividend looks pretty good to me. Of course, I would rather see a dividend yield of at least 4%, but I can't complain since Nike is aggressively growing the dividend payment. In due time, it'll eventually be at that magical 4% number. Next, let's check out their debt situation to see if it's manageable or not. It looks like their debt was nearly non-existent or at least minimal up until the pandemic. And now their long-term debt appears to have stabilized, but I hate to see their debt-to-equity ratio be trending in the wrong direction. All in all, their debt still looks great, but if it continues to worsen, then Nike may be in trouble. Next, let's examine their adjusted stock price total return to see if Nike is a dividend compounder with cheese. The total return matters, just like the size of your feet matters to shallow people. Anyways, the one-year performance is about negative 26%, which is not good. And if we zoom out to the past 10 years then we are looking at a total return of 76%, which breaks down to a compound annual growth rate of 6% year over year. Lastly, when we look at their 20-year performance, then it's 847%. Year over year, they saw an average rate of return of about 11%, which tells me this company has seen better days, and it has lost its momentum in the past few years. Next metric will be the shares outstanding. We want to find out if the company is issuing more stocks and diluting the shareholders, or are they buying back shares? Buying back is a good thing, because less shares outstanding means each share you own has quality over quantity. And in the case of Nike, it looks beautiful. In 2010, they had about 1.9 billion shares outstanding, and currently there are 1.5 billion shares. Except for the pandemic, it seems like Nike is laser-focused on returning value to the shareholders. You love to see it. Next up will be the revenue and their net margin. The net margin will tell us the company's profits after paying for all of the expenses related to running the business. And in the case of Nike, despite all of the fear and doom, their revenue pattern and growth is absolutely delicious to see. It just goes up and up like the number of browser tabs on your screen when you're researching a car you want to potentially buy. Not sure about you, but my phone has no less than 80 tabs open because I'm constantly researching companies and keeping up with my Tottenham Hotspurs. And their net margin seems as if it hovers around 10%, which is pretty darn good. So far, I have to say, their numbers look pretty sweet. And not too long ago, Nike posted their 2025 Q1 earnings, and it did not look good. Their revenue was down 10% year over year, and their bottom line was down by 28% in the same time period. So that answers the question at the beginning of the video. The reason why Nike stock is so low is because their numbers are getting crushed without having a concrete game plan to turn it all around. And now we made it to my most favorite part of the video. We are going to run some valuation models to figure out their intrinsic price. We'll see if Nike is undervalued or a value trap. The first one is the multiples valuation, and that gives us a price of $86 a share, which is not too far off from its current trading price of about $78 a share. Next is the discounted cash flow, and I must say Nike's free cash flow is amazing to see. It boggles my mind how cash-heavy Nike is. Anyways, their DCF price is $107 a share. Next up is the DDM valuation. Their current dividend yield is nothing to write home about, but the fact that Nike is growing at 13% year over year is amazing. Based on their dividend, the intrinsic valuation is $131 a share. Lastly, we have Benny Graham's model. This calculation spits out $66 a share, which brings us to the conclusion. After doing all of our math based on their numbers, the intrinsic valuation for Nike is $97 a share. Well, what about the Wall Street analysts? Well, Wall Street thinks that Nike is worth $97 a share as well. So what's the buy price? When is Nike considered a buy? With a 10% margin of safety baked in, then Nike is undervalued at $88 a share. And if I were to buy Nike at its current price, then I would get a 20% margin of safety. So what's my personal take on Nike after hearing about their story, headwinds, and numbers? I think on paper, the company's fundamentals and data look amazing. However, the nature of apparel and shoes tends to be very cyclical. The rocket ship for Nike's bull run is finally coming to an end. I'm not saying that Nike will crash like Under Armour, but I'm also not saying that Nike is the best undervalued opportunity in the stock market. I genuinely believe there are other dividend compounders on sale right now that are more attractive to me than Nike. If money were to come out of my booty hole and I had an endless supply, then I would grab a 100 shares of Nike right now. However, since my capital is limited and I work a minimum wage job, I need to be picky. As such, Nike is a pass for me right now despite knowing that it's undervalued. I think as time goes on, they will continue to be the market leader and find their identity as the trendsetter once again. I think from 2020 to 2024, they ran into losing their cool factor in the name of optimized operations. But once they go back to their DNA of pushing the innovation boundaries and being the king of athletic leisure apparel, I think Nike will see better days ahead. Me personally, I'm eyeballing and buying Google right now. That's me. Please do your own research and due diligence to conclude how you feel about Nike. And if you made it to this point in the video, well, this might not be for everyone. But it's for someone watching this video. You got to let go of that stuff in the past. When you dwell on your past mistakes, you'll end up defining yourself by the worst moments you ever had. When you're going through a messy breakup, or when you lost your job or will to live, that person constructed only one chapter in your book of life. If you stay in the past, you'll think that you're a failure, a terrible person, or a loser. That's not who you are now. What matters now is what you choose to be today and this upcoming year. Who and what kind of person do you want to be? Your past mistakes are there to guide you, not to define you. Your story isn't over, and every day is a blank page waiting to be written. Use what you've learned to create a future you're proud of, one that reflects growth, resilience, and hope. I appreciate you watching this video, and I'll talk to you next time. Peace.